Hello, Ladislas Moyes from thewanderinginvestor.com. So today I'm in Cuenca in Ecuador, and we're going to go check out a house that's being sold for $530 a square meter or $50 per square foot that's fully renovated. It's a historical house right here in the center. We're going to meet with Veronica, my agent here, who's helping some of my family members make a purchase here. And we're going to go through all of the numbers in terms of the return on investment, the cost, maintenance, etc., rental prices, the whole deal. So why Ecuador? Objectively, when you look at Ecuador from a macro point of view, there isn't much to say that's very positive. It's a country, when you look at all the rankings in terms of ease of doing business, competitiveness, etc., it generally ranks along with Brazil and Argentina, which are really laggards from a competitiveness point of view. So that's not a plus. It's a very bureaucratic country. So this, not a plus. Also, if you look at the export profile of Ecuador, it's essentially just commodities. They export oil, they export fish, flowers, agriculture, some minerals. That's all they export. There's nothing that's being done locally, really, no value add locally. And seeing how there aren't that many reforms going on, that's probably not going to change. Taking a step back though, because we're probably going to be entering a commodities bull market, it'll be fine for the country. If you look at the debt to GDP ratio, it's approximately 60% right now. It's relatively high, but it's manageable. In 2022, at some point, the yields on the government bonds really shot up to almost 30%. The country was close to default, but it didn't default. Since then, it's relatively okay. So that's kind of the situation, and you can't expect too much from the politicians here. Luckily, it's a dollarized economy, so it forces honesty on the politicians. Generally, it's better when the economy is not dollarized so that you can set your own monetary policy. But when you have politicians of low quality, it's actually probably better to have a dollarized economy. So those are kind of the pluses and minuses. So I don't think that your real estate investments in Ecuador are going to do well just because of something fantastic happening on the economic front. I think rather, nor will anything catastrophic happen to your investments because of the economy. Rather the risk is political and indigenous revolutions like we're seeing in Peru and Bolivia. These things happen once in a while, but often they just last a few months and then things are fine. Rather, what I'm looking at here in Cuenca is a city within Ecuador, which is a city of excellence, essentially. So it's a small town, about 300,000 people, beautiful historical town. So you can see the amazing cathedral behind me, gorgeous. The whole center is all these like little historical buildings. There are a bunch of rivers that go through. We're in the middle of the Andes Mountains, so the hiking is absolutely amazing. It's pretty, and there are a lot of activities. Life is affordable, and whenever you look at research, or whenever you Google top 10 places to move to in Latin America, top 10 places to retire, etc., Cuenca is always in these lists. So rather, my running thesis is that, and that's why my family bought here, is that we expect that over the coming decade, millions of North Americans and Western Europeans will want to leave these countries because of social issues, because of cost of living issues, etc. And a lot of them will go to Latin America, and they're going to be looking at these lists, and they're going to be going for cities like Cuenca. And Ecuador's immigration policy, so I did a video as well on how to immigrate to Ecuador, how to obtain residency here. It's very easy to obtain residency here. There are tons of ways to obtain residency, including buying real estate, but there are also ways of getting residency that are more affordable. The city itself is safe. Unlike many cities in Ecuador, there's very little crime. You can walk around and you won't be attacked. So that's a plus. And that's also causing internal migration from other cities in Ecuador to Cuenca. So it's not just foreigners that are moving here, it's also Ecuadorians, because it is a city that is better than the other cities. And the city has a lot to offer. It's got private schools, there's even a private German school, There's a lot of, it's a healthcare destination, healthcare tourism destination. So as soon as you arrive here, one of the things you notice is that there are doctors everywhere, hospitals, private clinics, etc. So very good place from a healthcare point of view. And there's a large and growing expat community. So historically what we saw was mostly retired people, retired North Americans. And in the last few years, the profile has changed, and we're seeing more younger families and digital nomads that are coming here. Ecuador, from a tax point of view, isn't fantastic, isn't the best solution, but it's certainly better than Colombia, for example. And if you structure things well, you can really get to a very low overall tax rate. So what I see is, for a place like Cuenca, I see so many positive catalysts because it's so easy to move here. It's nice as well. You don't really need a car. It's very walkable. There are bicycle lanes all over town. Very easy to get around. Public transport is good. The airport is, until recently, was just a domestic airport, and they have recently changed it into an international airport. So there are now flights to Miami, and they're looking at opening routes to Peru and to Colombia. So this city has a lot of catalysts. So when you look at investments here, sure, look at the net capitalization rate or rental yield, but what you want to start building is the potential for capital gains and for an increase in your net rental yield over time. So this really is the thesis. So now we're going to walk to that house, and we're going to have a look at all the numbers with Veronica, my agent, and see how interesting of an investment it is. Let's go. All right, so here's the house. So 3 one-bedroom apartments and a large 3-bedroom apartment, and as well a little store. So we'll go through all the numbers, but essentially this store is being rented for $700 a month. Hola. It's a little cafe. It's cute. Hello. Quite a few people come here. They use it as a little internet cafe to work. The internet is good. So yeah, so the landlord is getting $700 per month, and the tenant is paying for all of the bills, so electricity, gas, water, etc. So this is really, really easy income. No work to be done whatsoever. Cool. So now let's go check out the apartments. Hola. All right. Hey, Veronica, how are you?
I'm good. How are you doing?
Good, good. Cool. So we're going to go check out the apartments now. So one of the big drawbacks of this house is that there is only essentially 2 parking spots, right? But the advantage is that it's right in the center, so most people who come here and rent, it's all foreigners. All the places are tenanted right now. So typically foreigners looking to rent right in the center of town are not looking for parking. So you can see beautiful, like stunning historical house, well renovated. I mean, you can see the little touches. There's even a little place here to hang out. You know, they took care of all the details, even like plugs for your laptop. So very nice. So there's 1 unit here. This is a 1-bedroom apartment. So, you know, kitchen, kind of living room, and down there the bed. So this is going for about $450 a month, all bills included. Then there is another apartment here. We don't quite have access to it because there are people in there. Also, they're paying $450 a month. So there's a living room and kitchen here. Here there's a bedroom, so it's a one-bedroom apartment. And now this one, which is my favorite of the one-bedrooms. Hello, can I come in? Great. All right, so cool, nice living space. Much brighter than the ones downstairs. Right. And a bathroom here, living room, or rather bedroom up here, right? So again, this whole house is 1,100 square meters roughly. So it's huge, really huge. So 11,500 square feet. And this is the penthouse. So large 3-bedroom apartment. Hey, how are you?
Yeah, well.
Good? Can I go in? Great, thank you. And this one is absolutely stunning. I mean, look at this. Beautiful ceiling. You can see the ceiling has been completely redone. You know, the design is traditional. It's just all clean and nice and very bright. Very bright. Very, very bright. Upstairs, there's a whole mezzanine that is not being used. Right up there. So that's not being used. There's also some storage unit there. 3 bedrooms. So this is being rented for $1,200 per month plus bills. All right, so nice view on the street. And I mean, this is just so much real estate for $565,000, which is the listing price. Obviously, I'd negotiate. It's a low liquidity market, so whenever I enter low liquidity markets, I make sure to negotiate relatively hard, because essentially when you buy in such a market, you're not just a buyer, you're a liquidity provider. But yeah, like, it comes down to $530 per square meter for this whole house, or $50 per square foot. So, and it comes entirely furnished. So I mean, in terms of value, this is quite attractive. All right, cool. So now we're going to sit down with Veronica and do all of the numbers. Great, Veronica, thank you very much for showing us this place. So let's go through all of the numbers. So the little cafe is being rented out for $700 a month. The 3 units, the 3 one-bedroom units on average for $450 a month, including utilities. The large one, so this one we're in, the really nice one, is $1,200 a month. What do you think the occupancy rate would be approximately for the apartments?
Due to its location, at least 11 months out of the year.
Yeah, in terms of location, it's great. It's right in the center. People who move here or just want to stay for a few months in Cuenca like being in the center because you don't need a car here. It's easy to just get around. So when you get a historical building that is renovated, that is in a good location, it's very easy to rent out to foreigners because ultimately that's what people really want.
Correct.
They love the historical aspect. So here it's a bit of the, the dream life that they get to live.
That's right.
Cool. So, and then the store, I mean, that's rented all the time. The little cafe, that's
Yes.
easy. Also right in the center. What would be the utility fees / internet fees that the landlord would have to pay roughly on a monthly basis for all 4 apartments?
For the entire house, approximately $200 up to $250 a month for all the apartments and the master main house.
Personally, in the numbers, I would prefer to put $300 to be on the safe side. And in terms of property tax?
Property taxes a year, about $300 average, and that's how much they've been paying.
Yeah, so imagine this massive house with 4 apartments, a retail outlet, $300 of property tax a year. And then if the owner is over 65, then he'd be paying even less, right?
Correct. If the owners are after 65, then you get senior discount benefits, and that amount can come down to a third or not even that. It's really a good situation if you're after 65.
And then also that would impact the utilities if you're 65, correct?
That's correct. Yes.
How does it work?
Discount. They also get discounts, especially in their electric bills. Not much into the internet, but electric and water bills, they're going to get half price or even less.
And because this is one whole house apart from the retail outlet, it's one bill, right? So it's all on the retired owner's name.
That's correct. We would have only one meter for electricity, one for water, one for the entire house.
Cool. So, the numbers really improve in terms of upkeep if you are 65 and over. Even if you're 65 and under, $300 of property tax, not much. 300 of utilities, cheap, but you can slash all of that essentially in half if you're 65 and over, which would help with the capitalization rate or the rental yield. Roughly, when we do these numbers, we take out all of the fees, etc. I didn't put any property management for this one because what's happening is actually the tenant of the top unit is the property manager for the smaller, the 1-bedroom units. So that makes property management easier, and he's still paying $1,200
Correct.
and does property management. So we'll leave it at that. But essentially, you get a bit over $31,000 net a year in income, which gets you a net rental yield of about 5.6%. So if I were to buy this unit, Veronica, and let's say you're helping me find real estate here in Cuenca, and I tell you, what can I do to get a better rental yield?
Well, we could potentially work into the smaller units rental income, which personally think the price at the moment, the prices are excellent because once again, the location. And I think we can improve that.
To how much? So right now we're at an average of $450, bearing in mind the one at the bottom is a little dark and the one on the top is very pleasant.
I would try to raise it at least to $500 a month because according to what I've seen, $550 would be more than enough, more than fair to charge for a unit with this location and that size and just, with everything around. Yes.
Cool. And what about the purchase price? So it's listed for $565,000, including all the furniture, which is a big plus. Typically, so I'm not asking about this property in particular, but generally in Cuenca, when people come and negotiate, how much can they, what's culturally expected to negotiate? Like in some countries, you can negotiate 5%, in others, people don't want to negotiate, in others, it's 10%. It really depends.
Well, here it is too. It really depends on how motivated the seller is, number one, and how flexible the whole negotiation is. But I would say in this case, we are facing a pretty flexible situation and also motivated seller. He needs to put the money in a different investment, and that's why he's considered not overpricing the unit, and also he's very open to negotiate. So that means that we are facing a pretty good range or percentage of negotiating room there.
So, if we were to raise the price of the 3 1-bedroom rental units to $550 on average, and if we were to get this building for 500,000 as opposed to 565, we would get down to a net yield of 7.9%. So, rents as is with price as is versus 500K and 550 for the small units, essentially the net capitalization rate is somewhere between 5.6% and 7.9%. Essentially, it's somewhere in that space. Look, is it a fantastic capitalization rate? No. Is it decent? Yes. But I think the investment thesis for this house is the fact that you're getting so much prime real estate for a very low price per square meter of $530 or per square foot of about $50. So it's deep value. So essentially you come to Ecuador, you buy some deep value away from your own country, away from your own geopolitical risks, etc. You get a completely different profile in terms of investment. So I see this as the investment thesis, and the fact that you have control. Because Airbnb regulations here are ambiguous.
Uncertain?
Yeah.
Yes.
Right. So essentially there are no real Airbnb laws in Ecuador. So you can kind of do whatever you want to do. But if the other owners in the building do not like the fact that you're doing Airbnb, then you can run into problems. So having an entire house / building like this essentially guarantees that you'll be able to do Airbnb. So these were the rental yields for long term. If you were to do Airbnb, which you can, generally it'd be pretty fair to say that you could expect about 30% more in terms of net yields. So again, if we're going to take this and push it through the various scenarios, then with Airbnb, we'd be looking at net yields of between 7 and potentially 9%, which starts to be quite interesting. So Veronica, you've been in real estate for how many years here in Cuenca?
I've been doing this for just about 10 years.
10 years. Have you seen a difference in terms of the profile of people that are moving here? Because historically, Cuenca in Ecuador was just old people, retired people, typically North American. You just go onto these lists of top 10 places to retire in Latin America. Cuenca was always there. Is it still the case, or are you starting to see a change in terms of people?
No, now it's actually completely different. Years ago, we, as you well said, used to be facing only older couples moving in, retired people, but now it's completely different. We are having now much younger people moving in, younger families, just people wanting to work from their houses in the middle 40s, 30s, 50s. So a much younger expat population are starting to move out here. And also from all over the world, we can find a lot of Europeans now here, people from Russia, China. So we've also expanded in that regard.
And I think this is very interesting because the profile of people moving here is changing. And in some markets you can get some very good yields or capitalization rates, but it's based on very high occupancy rates and based on where you can tell that the people are going to be building a lot more, and your yields are capped in many ways. Here, when I look at Cuenca, I feel that there's upside in terms of rental prices because I expect a lot more people to be moving here because it's so easy to move to Ecuador. So we're seeing a lot of people in North America and in Europe wanting to move to Latin America. When you actually really look at it, Ecuador is probably one of the easiest and cheapest countries to move to. So I expect more people to come through. And if you buy a whole building like this right in the core area, you're always going to have tenants, and chances are your rental prices are going to go up. So I feel that in such an investment, you're not just playing essentially deep value because you're paying so cheap for what it is and average net rental yields, but there's also upside, not just in terms of rental yields, but also in terms of capital gains. Because if you were going to build, I think this is very important, builders in the center of Cuenca. When they sell something in the center for new builds, you will not find anything for less than $1,500 a square meter. And here you're buying fully renovated historical for $530 a square meter. So honestly, in terms of absolute value, this is a really good investment.
That's right.
Not the best cash flow, but absolute value, it is tremendous.
That's right. I totally agree with you.
Veronica is helping some family members of mine invest in an apartment. It's a bit smaller. The budget was smaller, but we're expecting some decent rental yields as well. And the value that we're getting here in Cuenca is quite interesting.
Correct.
Cool, fantastic. So if you're interested in real estate in Cuenca, I wrote a whole article below. You can see the link below explaining the macro situation in Ecuador and also the neighborhoods in Cuenca that are interesting to invest in. Thank you, Veronica.
My pleasure. Thank you.
You can go to my website, thewanderinginvestor.com, and sign up to the private list. It's entirely free. This way you will be getting insider information as I travel around the world looking for opportunities. Lastly, feel free to follow me on Instagram at The Wandering Investor. I look forward to hearing from you.